Hello, and welcome to What's Next Wall Street. I am Georgia Alfredas.
And I'm Dave Mathews. Now, this is a show about stocks, crypto, and the new decentralized financial Web3 world around us.
I've got details on all the hot new trending products that everybody's talking about using and investing in. And today, I'm talking about all that stuff.
Well, I'm going to talk about what that South African overachiever Elon Musk is up to, as well as show you a company with an engine to make three-dimensional artwork that it can appear digitally inside your own home, office, studio, kitchen.
Cool.
Now you get the drift.
Yeah, I do. So we've got Greg Krause, lead instructor at OptionsPlayers.com, as our expert. Greg charts a lot of these companies, and those chart indicators can show where a particular stock is headed so that it's easier for you to target investment potential. So what Greg does is combine technical analysis with fundamental knowledge.
That's right. Our goal is to help you become a more informed trader with a tailored trade plan so you can stay up to speed with what's next on Wall Street and keep stacking your gains.
So listen, you can email us at OptionsPlayers.com, hit us up on social media at What's Next Wall Street with your questions. We can also direct you to instructors and experts over at OptionsPlayers.com who dig into trading fundamentals.
Now you can watch the episode of this on the OptionsPlayers.com YouTube channel or listen to the podcast on Apple, Spotify, or wherever you get your podcasts.
Now, whether you're listening to the podcast or watching on YouTube, make sure you subscribe, hit the alert button so that you always know what's next on Wall Street. And if you like it, give us 5 stars. If you don't, just, don't worry about it. Okay, Dave, last year people were thinking about buying electric cars in the future. The future is apparently here because while sales of new vehicles dropped about 12% compared to the first quarter last year, Tesla is driving up its car sales despite a global computer chip shortage. They sold 310,000 cars in the first quarter, up about 68% from the same time last year. Still, the amount falls just 2,000 short of the company's production goal. Now, just because people are buying them doesn't mean they're going to actually get them. Not as quickly as they'd like, anyway, because of the chip shortage, which, of course, is affecting everyone. Yes, even Tesla. In fact, I had heard that Tesla had removed the Roadster from their website, but there it is right there. And I was able to order it. I didn't because they wanted 5,000 immediately and then another 45,000 in 10 days. And I think my husband probably would be upset if I used our kids' college fund for that. But you know what? The kids might like it, so maybe I should ask them that question and let them make that decision. But I digress. I'd also heard that the Cybertruck was missing in action, and it's still available for order too. But yeah, we haven't heard much about it. Look at that thing; it's cool.
So cool.
Meanwhile, for those of us still driving gas guzzlers, the White House is insisting that a gas tax holiday is not off the table. The administration says all options are being considered to bring relief to Americans struggling with soaring gas prices. However, some lawmakers are concerned that suspending the gas tax would take money away from the Federal Highway Trust Fund, which helps pay for highways and mass transit. There could be an energy rebate of $100 a month even to eligible taxpayers and an additional $100 per dependent. So I'm going to get 3. Yeah, some states are working on their own measures as well.
My boats will love that news. Well, back to Elon. U.S. security regulators still say as long as Musk uses Twitter to disclose information to investors, the SEC can investigate those tweets and the accuracy of Tesla's public statements, which stems from a 2018 ruling which required him to get pre-approval for public communication that could affect the Tesla stock price and shareholder value. This is after he asked the courts to throw out this 2018 ruling. Although in an ironic turn of events, Elon revealed how he now owns a 9.2% stake in Twitter, triggering a more than 20% rise in its shares, worth nearly $3 billion with a B, likely making him the biggest shareholder in the microblogging site. Oh, and the 36-year-old Twitter CEO and former CTO, Parag Agrawal, tweeted on Tuesday morning, "It became clear to us that he would bring great value to our board, sending Twitter shares up over 5% in pre-market trading. This financial vote of confidence in the company may have been leveraged into his new role as board member for the firm. Personally, I wonder if this leverage is going to accelerate Twitter users to getting an edit button."
Oh.
Touche, SEC.
Touche indeed. I got an answer for you on that. This is so weird to me because I thought Elon hated Twitter. He recently polled his 80 million followers asking whether or not Twitter adheres to the principles of free speech. I wonder if he'll change things now that he's on the board. Now, free speech, we all know, isn't really free. There are levels to this. Did you see Elon's poll asking users if they'd like to see, you said, see that edit button for tweets? Well, Twitter has been against it. Elon misspelled yes and no on that poll on purpose. The one you're talking about earlier, to drive home the point that typos cannot be fixed. The votes were overwhelmingly yes, and voila, Twitter just announced that an edit option is in development. It's going to be available for Twitter Blue users. You heard of Twitter Blue. Twitter Blue is a monthly subscription that has exclusive features and lets you customize your Twitter experience. At least that's what the website says. I guess if I was the richest person in the world, I would do the same thing. I would buy everything I don't like and change it to reflect what I do like. I mean, people buy politicians every day. Why don't they buy podcasters and YouTubers? Dave and I will say anything you want. Just send the checks.
Wait a minute. I know your journalistic credibility can't be bought, Georgia. Did you see, though, the Forbes list of billionaires?
Wow.
There's about 2,600 of them, and Elon tops out the list with a net worth of $219 billion, followed by Bezos at $171 billion, Bernard Arnault at $158 billion, Bill Gates, my old buddy, at $129 billion, William Buffett at 118,
Yeah.
and lots of new faux crypto billionaires, including Changpeng Zhao from Binance, Sam Bankman-Fried and Gary Wang from FTX, which is an exchange, Brian Armstrong from Coinbase,
Wow.
Chris Larson from Ripple, and the Winklevoss twins from just owning Bitcoin.
Crazy.
Unbelievable. My favorite part of Elon on this list is he was nearly broke after going all in on Tesla and SpaceX.
Okay, so this is what's cool to me. Did you know that in 70% of these billionaires are self-made? That's so incredible. That's like really the American dream. Meanwhile, there are some newbies on the list making history, like Rihanna, who is new to this list with a net worth of $1.7 billion. Yes, Riri. And she's the first person from Barbados to reach billionaire status. Her makeup and lingerie line might be an IPO to watch, okay, with a valuation of $3 billion. OpenSea's co-founders, Devin Finzer and Alex Atala, are both worth $2.2 billion each, while Nikki Viswanathan, I'm sure I'm saying that wrong, but they're rich. That's all you need to know. And Joe Lau, their startup Alchemy has software that powers thousands of blockchain-based computing firms, and they're worth $2.4 billion. Thank you each.
Wow.
Y'all, they started that company 2 years ago, and now they are billionaires, and they're just little babies. But some notables dropped off the list, like Peloton's John Foley, who was worth $1.5 billion last year. He's basically poor now. Now that he's only worth $400 million.
But remember, Georgia, these are paper values. Look at what happened with the Web 1.0 bubble. That bust, and now I'm worth about 50 cents.
Yeah.
Well, wait, even 50 Cent made most of his money on vitamin water as an investment, not even wrapping.
Yeah.
The same goes with Skillz co-founder Andrew Paradise, who was worth over $2 billion last year. He's basically in the soup kitchen line with a net worth of only $400 million.
And poor Whitney Wolf Herd. She was the youngest self-made billionaire on the list last year with her dating app Bumble, but now she's taken a tumble from $1.3 billion to a pitiful net worth of $700 million. Girl, you can't sit with us.
Swipe left on her.
Yes.
Back to enabling the richest guy in the world, Georgia. I know you rented a Tesla privately, and that whole charging up on the road trip with kids did not go so well.
No, it did not.
But Hertz is adding Tesla midsize SUV to its rental fleet. Customers can now rent the Tesla Model Y, and this comes several months after we reported that Hertz was buying 100,000 electric vehicles from Tesla, primarily, though, the smaller Model 3. And more Tesla news. Tesla shareholders could soon be gifted a split of its stock.
Ooh.
The company announced in a tweet a vote on authorizing more shares that will be sought at a meeting this year. Now, in 2020, Tesla did a 5-for-1 stock split. Now, remember, Elon fired their press team, so he or the investor relations team are probably sending these tweets out.
Okay, so Greg, let's bring Greg in here. I got to ask, is it too late for people to get on the Tesla train and the Twitter train? Should we buy now? Because it seems as though these stocks are only going to go up, but I mean, is it just too expensive? Should we buy now? What do you think?
Yeah, I mean, look, it's hard to say. Everybody wants to buy low and then sell high. I would have said not to buy Tesla when it was $500 a share, and now it's over 1,000. So why listen to me? But Tesla is valued more than every other automaker and everything put together. It's about 1.2 trillion. That's just crazy. I mean, there's no way that the cash flow from any cars or anything they do is ever going to reach that unless it's really big in solar or something like that, big government contracts. Now, yeah, so no, I'm just going to get out and say it. No, I think before they ever get to that cash flow to justify that evaluation, we'll have a recession, which, I don't know when that'll be, but they're never going to actually equal, or they're never going to have a fair evaluation at $1 trillion. A lot of analysts that are normally bearish say it could go all the way down to about $200 or even lower than that per share. All I know is I don't short anything that Elon Musk has, because he'll get on Twitter and say, "Hey, I hate shorts," and then everybody will squeeze you out. So I'm not touching it. I would just
Greg, he actually sold on his website short shorts. He sold.
yeah, the shorts.
Yes. All right. Thank you, Greg.
So Options Players member Hunter West emailed us with a request for this pro tip segment. He asked, can the What's Next Wall Street crew go over the essentials for a trading plan for the newer trader? Georgia,
Okay, since you asked the crew, yes, I'll give my 2 cents. Do not trade with your emotions. I say this because this is my biggest problem. If a company's got a great story, I'm all in. Oh, it has something to do with women, minorities, children, pets, the elderly, the rainforest, you name it. So I have to pump my brakes quite often and take my heart out of it, So, Greg, what say you?
New traders, most new traders, let's just say they go and they get Robinhood or something like that. And those apps are kind of built to like gamble or be more of a casino than it is a educated guess or at least some type of investment advice. So I would say first, find what you want to trade in. There's so many things to trade and so many ways to trade them. It doesn't even have to be stocks. It could be bonds. It could be crypto. Then you could trade options. You can so on and so on. Find what you want to actually trade that you find interesting, and then find people that trade them in a group, because sitting there doing this is going to get so boring. I promise you, nothing's more boring than staring at candles going up and down on a chart. So having people to talk to, chat, and just kick it with, that's going to help. And then if you can't think of what you want to do, but you want to get investing, find a group of people that you actually get along with, and then trade what they do also. Because, then you'll at least be able to hang out there. But really new traders, what to focus on besides that, there's so much. There's, education's a huge one. You got to understand what's happening, even if, nobody can guess where the market's really going to go at a certain time, but you at least need to understand basics like don't put all your eggs in one basket kind of things. That should be common sense. But new investors today have no idea what that means. So protect your money, hang out with people that you get along with that also share your likes, so want to trade or invest, and then protect your asset, or let's say protect your inventory. So most new traders, what they'll do is they think about all the winnings that they can get, but they never think about how they can lose. So first off, think about the losses, not the winnings, and then I'll hurry up and end it there.
Hey, so Greg, you want to talk about losses? So I follow the Warren Buffett methodology, where I invest in companies that I use and love, or I know a lot of people are using. So my investment in AOL crashed. JP Morgan Chase crashed. Twitter, before Elon got involved, I was an early investor in Twitter. What did it do? Crashed.
I can't make the sound.
My favorite, Sirius XM Radio. I love curated music there. Crashed. TiVo. Amazing technology. Tons of patents. TiVo invented time-shifting television. They licensed that technology everywhere, and people stopped paying for their intellectual property. Crashed. So follow what you love, kids.
Thanks, Greg. So this is the part of the show where we get to hear from you. You can always hit us up on social media at What's Next Wall Street, comment on our YouTube page, or email us at wnws@OptionsPlayers.com. We use real emails.
And this first email comes from Jim in Mobile, Alabama, who asks, with Elon Musk being the single largest investor in Twitter, should we expect Tesla and Dogecoin to enjoy a move higher too? Interesting connection and correlation there.
Yeah.
Greg, what do you think?
No, I don't think there is a correlation at all. Tess, I personally have a little chat group with OptionPlayers.com and everything, and I think Twitter was a very good purchase when Elon said, told us what he was doing. Just because he has I call them Elonites, kind of like the people that follow him.
Like the Argonauts?
Yeah. So now when he sends his little thing to his 800,000 people that are going to buy whatever he talks about, now I look at it a little different. Those individuals only have so much money. So they used to just throw it at Doge or Tesla. You can't buy SpaceX. That's the one I want to buy. I guess you could buy it through buying Alphabet, which owns like 10% of SpaceX, but near or there. So now you have to split up your Elon Musk money between Twitter, Tesla, and Dogecoin, right? So
and you can't buy partial shares in Tesla, and if Tesla's $1,000 now, that's tough for people. So Doge is really all the poor investor can afford, and maybe a little Twitter.
Yeah.
Well, I mean, hey, everything Elon touches turns to gold, right? So, I mean,
okay.
Is Twitter going to produce a lot more money? Probably not. Is the stock likely just going to go up because Elon tweets about it? Most likely. So,
all right.
I don't know. Yeah, I like Twitter way better than I like buying Tesla.
As Elon said on SNL, what was it? It's all hype.
It's all hype. No, it's a hustle.
Hustle.
Yes. All right. This next email comes from John Edward in Atlanta, who writes, since 1946, the first term midterm election has the SP 500 averaging 0.6%, negative 0.6%. And second year new Democratic president averaging negative 2.3%, while trending to hit highs early in April with lows coming May through October, while rallying November through December. All right, that's a lot. This is a real email, folks. Do we see this play out like usual or nah? I mean, I said nah, he's saying no. Anyway, because we've been dropping since November 2021, if the Fed can't control inflation and we get higher rate hikes in September through November, paired with midterms, could we see a 39% drop? Wow, that's real specific, from all the highs like we did in 2018. I thought about rewriting this email, by the way, to make it more podcast friendly, but all the numbers and percentages made my head hurt. So I just left it as is. Greg, you like numbers, have at it.
What? I don't even know what to do.
So I think he's talking about an election year, right?
I do have the question in front of me. Thank God you emailed it to me so I would understand it. And I kind of looked at it. And then what I'm going to do is I'm going to simple.
Okay.
Do midterm elections affect the stock market, and how will that relate to investors? I think that's probably what they're asking here.
Like, why all the numbers, dude? Why'd you throw all the numbers at us? What?
Yeah, so that's what I'm going to answer. All right. Okay. So elections in the stock market, they do affect because of volatility, right? So, and that volatility comes from fear. We don't know what the outcome is, right? We don't really care. Have you ever been anywhere? I mean, almost anything, the greatest fear is not knowing what's happening, right? So, say when I went to a certain school in the military, it wasn't, I'm afraid that they're going to do this or that. It's, I have no idea what's about to happen to me. That would have been, that's what I feared. Now, it's a little different though, because in general, summers, I think he was talking about with lows coming in May and things like that, and then increasing after October. That's actually kind of normal per year anyways, mainly because in the summer, everybody's just chill, right? What I mean is there's, not everybody's out there. The volatility dries up. People aren't making all craziness. Stock market or the big stock brokers and everybody that's super rich that's moving the market, they're worried about the Hamptons. They're not worried about going to, okay. And no, this has been proven. The volume dries up on these big moves.
It's true.
Yeah.
Yeah. So you're really left with high frequency traders and retail traders. And everybody else is just already in their stuff. They're going to let it long term, buy and let it chill a little bit while they go, have fun or whatnot. So there you go. And then everybody comes back, school starts, whatnot, and the trading starts again. And then we get that pump, we get that push up. So we usually say, oh, September, it just starts gaining it back, maybe October, and then and that's the same way. Apple releases all their new stuff, their have their events in September. There's just no events during the summer months. But then, with the elections, there's just a lot of market swaying information that comes out of right before the election, because everybody's claiming they're going to do this or they're going to do that. And I mean, it's just overhyped because, number one, none of the presidents or any of the elected people ever do what they say, but we stupidly, spend our money like, oh yeah, let me put my money in that. They're going to do this. Yeah, good job. Yeah, doesn't ever happen. They're all lying to you anyways. Why does the market react to it? I don't know.
Right. Okay. So listen, if you've got a question, we can answer it, or Greg certainly can. Okay. So hit us up on social media at What's Next Wall Street in the comments section on our YouTube page, or you can email us at wnws@OptionsPlayers.com with your questions.
All right, I especially mean people who don't own a car or real estate are crazy for NFTs and owning an intangible digital asset. Well, my good buddy Michael Gold in Manhattan has been building tools for the AR space over the last decade, and his team just dropped Shaderverse, a tool for the creation of these digital assets in the meta world. Michael, welcome to the show, my friend. And how did you jump into the NFT space from the virtual reality world where you were playing for the last decade?
Yeah, so we were making creator tools for the AR, VR space. And about a year ago, I got a phone call from a buddy of mine who's starting a crypto accelerator. And he said, Mike, I know you're really happy at NYU. You're running a research lab there, where you're managing a research lab there as an EIR. You got to get into NFTs. So we started Shaderverse then, and we figured there were a lot of professional artists that wanted to get into the NFT space, but they were reliant on coders to make NFTs. So we figured out that there must be a way to meet them where they are and make software for them to help them make NFT collections.
Well, cool. And you did this on top of Blender, which is an artist tool. So, who names this stuff anyway? Blender. What is a Blender?
Well, Blender is the world's most popular open source software for 3D artists. And it's been around for about 20 years. And artists have, almost every professional 3D artist has it on their computer because it's free, even if it's not their primary tool. So think Photoshop, but for 3D. So just one extra dimension in the art you can create.
Oh, very cool. So we've got some video that you sent here we're going to run through. Let's have you talk through this.
So what you're seeing here is the Shaderverse add-on for Blender, and the 3D artist can import their 3D assets and just click the generate button to view generative 3D art based on the assets that they import into Blender. And this is another generative 3D art piece that we made for the Edge of NFT group for their collection. And then this is a streamlined way to bring the 3D assets into augmented reality. So the artist is able to just create the collection inside of Blender and then preview it inside in web-based augmented reality without an app download right on their iPhone or Android mobile device.
So that was so cool. You showed me this, you gave me a little sneak preview in Miami when we were at Art Basel. And I had literally these crazy tokens popping up beside me, and people would freak out when they'd see these digital assets floating around. So when you think about NFTs, typically these would be like JPEGs or Bored Ape Yacht Club things or CryptoPunks like George and I have. But this is unique, right? Because you're using augmented reality for NFTs. I haven't seen this done before.
Yeah, we really think that the foundational art for the metaverse hasn't been made yet. And one of the things that we're really excited about is just allowing artists to 3D artists to be able to create content that can then be previewed by an audience, their audience that they build, without needing a coder. So they can actually be their own programmer, create the metadata for the NFTs all inside Blender, and then seamlessly preview it in augmented reality. So the very same assets that they make inside Blender, they can bring to the web via a model viewer that we have on shaderverse.com, and then people just tap view in your space. That's what you were seeing in the preview video. Tap view in your space, and the model pops up in the room that you're in. And this utilizes both web VR to preview the models, WebXR, and then the phone's native 3D asset viewer. Whether you're on iPhone or Android, it uses the phone's native 3D asset viewer to pop it up in your room for you, all seamlessly. That's
cool. And for those of you listening or watching the show, you are used to seeing this button, see in your own world, on Amazon, right? So Amazon has an AR kind of element as well. So I love that, Mikey, you and your team are making this for these digital assets. So, Facebook famously changed their name to Meta. Metaverse was coined, in 1992 with the book Snow Crash, right?
Yep.
So where do you see it? Still, that being said, it's been around for a while. It's still not mainstream, of course. But where do you see yourself or Shaderverse or the Metaverse in general in the next 5 years?
Yeah, that's a really great question. I mean, we are still at the really early days of web-based augmented reality, and I love web AR. I've been in the VR AR world for about 5 years, over 5 years now, and it was a really high friction world to get people into headsets, to get software built, distributed to headsets. You were looking at about a 6-month cycle of artists and developers working to get an audience into a piece, to get it put in front of people at a festival. Now with web AR, you can get it in front of people within minutes of a piece being finished. You're just pushing it out to a website. So that type of closing the loop of that cycle is already helping artists to make money faster, which is really, really, really important. And that's going to inspire other artists to jump in. So you have the speed of distribution that Web3 and advances in web-based AR is really promoting. Then you also have decentralization, which is helping artists to capitalize on how they're able to bring in revenue without middlemen. So that's really exciting for us. And then you have advances in on the tech side of things that are coming out, like new ways of interacting with the phones themselves. Like there's technology right now called Web GPU, which is coming out later on this year. So I think even before we have headsets that we wear all day, augmented reality headsets that are part of our general wearables, just by having these phones in our pockets with enhanced web-based augmented reality, there's going to be a lot more people jumping in the space, a lot more art created. And we're trying to do our part by removing the friction on the artist side, by letting them do everything themselves, and also by promoting open web technologies like web-based augmented reality.
I like this, Michael. Shaderverse is kind of like the Levi's and the pickaxes that the gold miners used to use back in the 1800s. And I remember you showing me around NYU when you were working with the lab there. You had VR glasses that had the ping pong balls on them to identify each person in the space. And now I see you've got an Oculus rig right behind you there on your probably your left hand. So and Oculus was the #1 downloaded app in the App Store, both on Christmas Eve and on Christmas Day. So that shows that the Christians just love this stuff.
Yeah, I mean it's really great that they were able to show such mass market appeal, and I think that that what Meta now is doing with it, they've proved that people will pay for a premium product in VR. And the industry just yesterday with the official launch of Unreal Engine got really excited about a lot of the new features there that are also making it so much easier for 3D artists, and the industry and community is just growing tremendously. And so all these advances help. Everything helps. And for us, we love all that, and we're also really excited about everything in the open web, and specifically, like I said, web-based augmented reality. I think that's, if I was an artist that wanted to get in today, I would look at all the open standards, because we know they're going to be around in 20 years. Other companies come and go, but the open web is here to stay.
That's right. And think about what Linux and Apache and all these services did to build the Web 1.0 generation. For Web 3, it's eminent. So cool. Thank you so much for telling us your story, Michael. Tell the fans at home, the artists, where they can download and get a hold of this software at Shaderverse.
Sure. So if you want to try a demo in web-based AR, just go to Shaderverse.com, and you can check out a really cool collection of parametrically generated trees that Edge of NFT, the best NFT podcast, made for the NFT LA show. And then if you're an artist and you want to try out the software, it's open source and free to download from github.com/Shaderverse/Shaderverse. And all you need is Blender 3, and you can install this plugin for Blender.
All right, Mikey, thanks so much. Keep in touch with us and let us know when Banksy, I see you got a Banksy beside you there, or some other artist is developing on your platform. We love to check in and see what gets created on it. So congrats on a launch.
Thank you, Dave. Appreciate you having me.
All right, buddy. Bye-bye.
Okay, one tried and true investment has always been the American dream, a home.
Millennials don't care about that.
But people can barely rent these days, much less buy. So to put it in perspective, here are the numbers. Median rent in the US is just over $1,700. That's up 17% from just a year ago. So cities dealing with the largest increase in rent, 23% or more, include Miami, San Diego, Phoenix, and Austin. Now, cities with the smallest annual spike in rental prices are of like 6% or less include cities like Cleveland, Minneapolis, and Detroit, because who wants to live there? I'm just kidding. Okay? So buying a house is even worse. Existing home sales and new construction have declined by more than 50% since the start of the pandemic. Of course, we all know this. So there was the shortage of workers and building materials in the beginning. The price of lumber was still 63% higher at the end of last year, though. So all is not lost. There are places that you can buy a house and not lose too much if there is a bust. Austin, Texas, for instance, right down the street from us here in Dallas. According to Smart Asset, if you bought in Austin, your home would only suffer possibly at the most a 5% drop in price within 10 years of buying it if there's a bust. Now, I won't give you the entire list, but at the top of the list is Austin, Texas. You got Boulder, Colorado, Midland, Texas, Rapid City, South Dakota. Basically, the top 20 are filled with cities in Texas and other cities in the north and northwest, places in South Dakota, Wyoming, Montana. Texas actually has 6 cities in the top 10.
Impressive.
Yeah. Now, the worst places to buy, not that you needed this list, if you bought a house in, say, Flint, Michigan, your odds of home value loss are 45%. Actually, half the cities in the top 10 are in Michigan. What's wrong with Michigan?
The water.
Well, that.
Jobs.
Yeah. So I give you these numbers because it's scary right now for so many people, but a house is usually an appreciating asset. So, Greg, as long as you're not buying in Michigan or Ohio, should people wait or should they buy now?
All right. So housing market is, not my expertise, but I have a lot of friends. That's all they do is buy and rent houses and things. And yeah, the market is crazy. So when I look at any market, I just kind of use the common sense thing. Would you want to buy the house next door to you for the price that it's selling? So, for me, let's say I bought my house for, like $200,000 10 years ago, and now I can sell my house for $400,000. When I look at that house, I'm like, there's no way I'm going to spend $400,000 on that, right? So I think we've kind of went way too much in the houses have gone way too expensive. So individuals already own houses, unless they're moving for a job or something, they're not really trying to move out, because when they look around and they look at all these houses, it's kind of like, I'm going to spend twice as much as for that than what I got. So it's kind of, do you really want to sell your house, even though you're going to sell your house and make the money and then transfer it over? It's that psychological thing. But really where I get to it is one simple thing. The cost to build a home is currently now lower than it is to buy a home.
Wow.
That becomes a problem. So, and I don't mean you're not a big company building homes. An individual average cost right now in America is somewhere around $379,000 for the home, and then like $30,000 for the lot. That would be $409,000 if my math is correct. With the average cost to buy a home is $416,000, almost $417,000. So it's $10,000 more to
Get a used
buy a
raggedy
home than it is to build it. And now, if you ever filled out your insurance, right? When you filled out your insurance and they say, hey, how much would it cost to replace your home? It's always like $100,000 extra, right?
Yeah.
And that's the problem, is now it's not. It's actually cheaper to build your house than it is to buy your house. Now, this isn't every area, okay? Some areas it might be more expensive to build, but it's just, I don't know. I look at it as the market's got to come down. Housing prices are going up, and then with the way too much, with income not even getting close to maintaining with it, nobody's gonna be able to afford the houses, right? So the first recession, foreclosures, everything else. So for me, I like to buy when everybody else is selling. So I'll let everybody go out there, and during their worst times of their life and they're getting foreclosed on, I'll come up there with my money and I'll buy all their stuff and rent it back to them.
Yeah, and that's
Okay,
how
but-
you got that massive Pokemon collection.
Exactly. But what if, Greg, I just sold my house while it's up and moved in with my mom? I haven't talked to my husband about it, but I'm just thinking that's the move.
Yeah. That's not a bad idea. All right. So, and I know y'all have some rentals too, but I was actually thinking about that. Like, I was like, where can I go rent?
Exactly.
And everything else. And then I'm like, oh, I got my friend with all this. So can I sell my house now, make, I don't know, 40% on something I bought? I don't know. I bought it maybe 7-8 years ago. I can make 40-50% on this.
But where are you going to live?
I'll just wait for the housing market to crash in the next 4 or 5 years, maybe. And then, then I can buy it. But, it's kind of how much money do I actually make? I might make, an extra $50,000 doing that versus getting my wife out of the house, moving all the stuff. I don't know if it's worth that headache.
It's the
right?
stuff. Yes. All right.
Yeah.
All right.
Thank you, Greg.
Well, we want to thank lead instructor at Options Players, Greg Krause, for being here with us today.
Yes, sir. So listen, if you have questions, we can try to help you answer them. And we're going to, veer off the deep end, but we're going to have fun doing it. We'd love to hear from you. Email us at wnws@optionsplayers.com or hit us up on social media at What's Next Wall Street.
You can, of course, watch episodes of What's Next Wall Street on the OptionsPlayers.com YouTube page or listen on Spotify, Apple, or wherever you get your podcast. And make sure you subscribe and hit that alert button so you get current trending info as soon as it drops. I'm Dave Mathews.
And I'm George Alfredas. See you next time on What's Next Wall Street.